Good evening, all. Hope you're doing well. We had a BOJ intervention today, and it did go as planned because on the weekend made this video, and I was saying how if they were going to do an intervention, it would be early on in the week because they don't want to coincide with FOMC and NFP, and we don't forget we've got a Powell conference as well, a press conference. So I guess they didn't want to, cause too much volatility. It was already crazy enough already today. But we can see from this shifting is that they have tried to buy cross yen. Okay, so they have gone long AJ, CJ, Swiss J, EJ, GJ, and NJ. All right, so they've gone long those pairs. So in a normal world, that would be quite bearish. Okay, so but we have to remember, technically, these are very strong on like high time frames. If you come to a daily chart, we're definitely trending higher. You don't really want to be fighting that trend. But sentimentally, we have seen that they've gone long, and that's caused the bubble to gravitate over here if it loads. I've had a bit of an issue with my internet today. I am watching some sport on my Xbox, and I've got my robot running, so that could be part of the problem. I've disconnected my VPN as well. So it might be a case of wow, that was slow, wasn't it? I wonder whether or not we've maybe got too much data on the sheet, because now we've got COT data, it might be causing a bit of a lag. If it is an issue, let me know, and then we can certainly look to split the COT data into a new sheet. That'll probably be a good way to do it, because if this is lagging for you guys and you don't really want to be waiting 10 seconds or however long it took to load that bubble chart, let me know, all right? Because I have got a poor internet connection, but if it's bad for you guys with a good connection, you must let me know. It's really important, okay? Because it shouldn't take longer than 2 seconds to load a bubble chart, but it took a while. So that's the yen. So what's happened is that they were long, they went net long, and they added, and then the BOJ intervened and it pushed price down. And now the herd, you could argue, being maybe quite savvy because they're looking at the technicals, they're looking to buy cross yen. That action has caused that bubble to get larger, and they got punished. And then we could theoretically see this come down if they hold. If they hold long cross yen, this bubble will come down, right? So in a way, it's good because we had a very stubborn retail mindset. They were adamant on going long, and we had a very stubborn central bank as well. So it's the combination of the two. It was like a bit of a deadly cocktail, and it was just really, really bad for that currency. So obviously, the central bank flow is massively more powerful than the retail sentiment, but it will help because it's the overall overarching mood and sentiment and appetite for that particular currency pair. Because if you think about it, if the herd who are constantly counter trend, constantly, every single day of the year, then that's going to be like a warning sign for the big fish and the savvy investors and those large speculators. So we may be coming to a turning point because we had a little bit of an intervention today. It was fought quite heavily, and we are seeing obviously a big wrestle, a big tug of war on cross yen. So it is of note that they've gone long cross yen. If they hold, that bubble's going to come down and it will be a buy. So don't look to buy yen at the moment. Wait till it comes down and then look to buy yen. So you'd be selling cross yen, okay? So currently we've got a strong pound and a strong New Zealand dollar, a weak Swiss, Euro, USD, and CAD. Aussie is mixed and gold is mixed. Gold did have a little foray, spent a little bit of time over here today, and it was like, no. And then they've gone long on gold. So we may see them profit on that, because what's happened with gold is that we've made an descending channel, which I just spotted. It's actually really quite obvious when you look at it, but we can see technically it's looking quite nice. It's quite bullish. It's very simple. Had a channel break, and we've got a new channel. And the FXCM guys have sold, right? So that's the gold view. However, the MyFX book they've gone long. So we have got a bit of a discrepancy with gold. So that's just that, right? So risk calc. Tesla's going absolutely bonkers. So that's making Musk crazy amount of money. He's already massively rich, but that would equate to billions of net to add to his net worth. So it is just bonkers. Apple being over 3% is massive because they're a huge company, and that 3% is a massive turnover. That's actually really bullish for overall market sentiment. Google's fallen. It's interesting. VIX is being crushed. The 10-year Treasury yield is down, and that should hurt dollar yen because they go in correlation. They move in parallel, historically speaking. So if the TNX, the 10-year Treasury, goes higher, it can tend to correlate with a stronger dollar yen. Okay, so but we've had a negative 10-year Treasury, so we may see dollar yen decline over Asia, but we'll have to wait and see. Indices are green. Little bit of red creeping in. They've gone long FTSE and Dow ever so slightly. They've also gone long dollar yen as well. And that mirrors what I was saying about this. And don't forget they've gone quite long, not only UJ but cross J. Right, so that's just the sheet taken care of. Don't forget we've got clock data now. If you want to navigate to the relevant aspects of the clock data, you just click on that button and you scroll down. So lots to talk about, but I kind of want to make it like a short video. So perhaps this might be worth just talking about is that when we first started doing the spreadsheet, I was working alongside a guy called Andy Alzi, and you might not know him, but he's actually like a clock guy. He's like a clock guru guy, and he was telling me we had like this conference call, like a video call, and he was saying to be wary when the commercials are at extremes, because he was saying they tend to be right when they get squeezed, and when they get to their extremes, then they tend to be correct in their bias. Now we can see is that they're actually they're considerably long yen, and we're actually beyond the 26-week halfway point of the year. So that's of note. We are at the extreme threshold there, and as he said, we need to be a little bit wary about extremes. So we may see a reaction from that, and we are seeing a reaction on it if we look at the bubble. So it will feed into the clock data. So when we look at it on the weekend, we'll probably see this come off, and then we may see a reduction on the large specs, and they're going to be less short, because what's happened is that they've bullied the commercials to such an extent, they're like, I'm going to give up, I give up, and now we're going to reverse. And then that's what the point where those guys step in, and then they take the opposite side of that transaction. So they're constantly bullying these guys. The banks are constantly after these small fish, right? And this is what we make up of as retail traders with these guys. Okay, we may not even be those guys thinking about it. These guys, the commercial traders, could be because we're retail traders, so that might be one step above us. We're probably just like the plankton, because we're just dealing with small lot sizes, aren't we? That's of note. So be careful at extremes. Okay, let's talk about the FXCM. The robot hasn't got anything to talk about because we had one trade today and it went to stop loss. We had a 10 pip stop loss and it got triggered over Asia, and we just haven't had the necessary conditions for a trade. And so we just had -1R today, so that's okay. Kind of want more trades out of it, but we need to have the conditions, correct. So we'd looked at gold, so that should be fine. They've shorted it, so that we should maintain this upper channel. Okay, but don't forget we've got FOMC and we've got NFP, so we could see this. We could see this break potentially to the downside. Or the upside. It's very tricky, but currently we are looking for longs because you know, it's definitely a buy at the big picture. We're below 50%, so it's a buy. If we go above 50%, then that's going to be net long, and then we can fall. S&P, where are you? And so they've gone long here, so we can draw a box. Where are we going to draw a box there? I don't know if you can hear this music in the background. I don't think you can. It's my neighbour playing some music. That's fine because they've gone long. So this is okay. So that would be normal. See the reaction there. If they happen to try and buy this dip, then it's going to make this tick higher. Then we will continue to fall. They've got to sell it in order for that price to come up. It's just the cruelest thing. And US 30. And they'd sold it, so you know what we come, and then they sold it again, so we should be wicking below. We should be above this candle there, and there we go. And we've got to stop this video because it's going on a long time now, but hopefully it was interesting, especially about the COT stuff and especially about the yen as well. It's taken a lot of attention on the Discord today, and we just focus on the yen. Marco had a good point, is don't just look at dollar yen, look at all, you know, the yen crosses, because we can become fixated on the dollar yen, but it could be moving because of the USD. So by looking at cross yen, the yen basket, we get a better idea, because it's very easy to fixate on dollar yen. Likewise, when we come to the COT data, when we come to the pound, you automatically assume pound USD, but it's not. It's the British pound, that, you know, as a basket, as a currency. So I think because we're programmed and conditioned to see pound, we think pound USD, but it's not. So you have to remember that, okay? So let's come back here, and this would be very normal because I'd sold it, and so they should get punished. And anything they do, they're going to get punished, okay? So that's today's video. Hopefully it was useful, and likes and subscribes would be awesome, and any feedback would be cool. And especially let me know about the bubble chart as well, because it shouldn't take that long to load. And if it is causing you performance issues and lag, let me know. And what I'll do is just simply create another sheet, which will then be given out on top. You know, when you subscribe, you'll just get a secondary COT data sheet. So it's not really a problem at all. And I could even have a COT tier. Yeah, I could even do that. That could be an option on Patreon. So if you just want to get the COT data, you know, you could do something for like $10 a month or something like that, and you'd unlock Discord, a little bit of Discord potentially, something like that anyway. So trade safely. We've got a big week ahead. Be careful of cross yen. Technically we are definitely a buy, but we're seeing the herd going, they're selling now, so that's good, and we'll have to wait and see how we go. So CAD yen should be a short, so let's look at CAD yen, and then we come CAD yen, and we should be negative by the bubble. This is a demonstration of the bubble logic, and also the performance of this computer. It's pretty bad, isn't it? We'll just wait 10 seconds, and it's crazy, isn't it? So you have to let me know if this is lagging, because I live in the countryside. Wow, that was slow. So it's minus 1.5, okay, and we've got a little bit of reds creeping into, so that's the technical and sentimental view. We've got more reds and greens. It's fairly bearish, and that's from the bubbles as well. So I wish you a good night, and I'll stop waffling now. Hopefully it was useful, and I'll speak to you soon. Risk disclaimer, for anything that you do in the financial world, is that you will need to use very strict risk management. So if you don't have the risk management in play, you're pretty much gambling, okay? And we really want to be looking at trading, and we want to be looking at risk to rewards. And in order to get a good reward, you need to define your risk. And if you don't know where your stops are, if you haven't defined your risk, then you could end up losing all your capital, okay? So you need to know where your exit is, and then by knowing that, then you can forecast your profit. But if you're entering willy-nilly based on some information that you found on the internet and you've entered without knowing where your stop is, you're going to encounter huge losses. So just to say is that it carries a huge level of risk, and it may not be suitable for all investors, and past performance is not indicative of future results. Okay, so it's a quick disclaimer there.